This is your LMAX exchange technical update for Thursday, September 14th, 2017. Euro dollar. So the euro looks like it could be in the process of topping out, at least in the short term, after the market stalled out at 120.93. That's the 2017 high that was seen on the 8th of September. If the market can close below 118.24 on Thursday, that would be a bearish short-term development, taking the immediate pressure off the top side and putting it on the focus on a retest of the 1663 low at from the 17th of August further down. That's really the most important support level right now if we're looking at things short term. Initially 118.24 will take the pressure off the top side. A break below 116.63 would trigger the onset of a more significant correction. So we'll see how things play out, but 118.24 needs to be closed below to take the pressure off the top side. Until then, the market could just as easily trade down and then trade right back up, hold above 18.24 and continue along with this uptrend in 2017 to fresh highs beyond 2093 and towards the next measured move in the 123 area further up. Sterling dollar. So the market did trade up to a fresh 2017 high as we had talked about, but at the same time, while we also warned that any additional upside would be limited, most likely with the market still deferring to a period of choppy consolidation instead of looking to extend meaningfully to fresh 2017 highs up towards the 135 handle. And so the bearish reversal day that was seen in Wednesday trade sets up a more significant decline back down towards some range lows now in the 127 to 128 area. Overall, the structure is constructive, but dips are preferred to be bought rather than buying breakouts at this point, with the market still seen potentially chopping around before making that next big move into the 135 to 140 area further up. Dollar yen. So dollar yen has pushed back up into the 110s, with the market now coming in towards some key resistance at 111. But 111 has been a difficult level for the market to overcome, and despite this latest impressive rally that we've seen, and it's been an impressive one since that Friday close, while the market holds below 111, the pressure does still remain on the downside, and there could just as easily be another topside failure here within the range highs here ahead of the next downside extension, potentially even back down towards and below that recent low from last Friday, that 2017 low at 107.32. Of course, a close above 111 would change the picture and would set the stage for a move up towards the range highs in the 114s. Euro Swiss. Euro Swiss, no new updates here. The market continues to consolidate. The consolidation is classified as a bullish consolidation, ahead of what should be the next major upside extension beyond 115.40 and towards the 120 area further up. Any setbacks that we see in this market, and we could see setbacks, are expected to be well supported ahead of or into the previous resistance turn support at 112, with only a breakdown below that level to delay this constructive outlook for Euro Swiss. Aussie dollar. So Aussie has pulled back since racing up to a fresh 2017 high at 81.26. If you remember, the market had pushed up above 80 several days back in late July, trading up to 80.66. The market came down for a correction to 78.08 before again running up into this most recent run to 81.26. But the market was unable to close above that previous 2017 high on the day that it made that fresh high. And so this has set up a bearish resumption potentially that could take us back down towards that support at 78.08. Dollar CAD. Dollar CAD is in the process of turning up and correcting a little bit following the breakdown that we saw to fresh 2017 and plus 2-year lows at 2062 and just ahead of that psychological barrier at 120. There is room for a more significant bounce now, considering the market was well extended after trading down over 10%. After putting in a 2017 high all the way up towards 140 and trading all the way down to 120. So again, room for a significant correction here back towards the 130 handle. Next medium-term resistance comes in at 27.80, while short-term resistance over the coming sessions, the focus is on a break back above the 24.20 area. Initial very short-term support for this market comes in around 22.40, but again, next sort of key support that the market would need to take out if it gets above 22.40 is going to be 24.15. Kiwi dollar, the market here has been chopping around, but overall we've seen the market come off pretty hard from that 2017 and plus 2-year high at 75.58 that was established back in July. At this point, look for a consolidation here, ideally with the market to be very well capped ahead of 74 in favor of that next major downside extension below 71.32, exposing the psychological barrier at 70, and then exposing a potential retest of the range lows and that 2017 low in the 68s. SPX 500, the S&P 500 continues to push to record highs. There's been no change in this structure just yet, and this is a market that's been pretty much trading in this uptrend for the past several years, and so the market would need to take a break to see a breakdown back below initial support at 24.17 to potentially force a shift in the structure. Until then, fresh highs is the way to go here, and we could see another move beyond 2,500. Initial very short-term support for this market now, I would say, comes in by that low that was seen on the 11th, on Monday, September 11th. That's at 24.69, 24.70. So we need to see a breakdown below that level to take at least the immediate pressure off the top side. Gold. So gold continues to trade within an uptrend, and the market has been quite constructive on a medium to longer term basis. The recent break of a 2017 high that was in place at 1300 has opened the door for a move towards a retest and break of that 2016 peak at 1375 further up. And so any setbacks that we do see over the coming sessions are expected to now be very well supported into this previous resistance turn support around 1300 ahead of that next major upside extension, again back towards and through the 2016 peak at 1375.